Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. Today on the show, the International Monetary Fund says rising debt, political risk dim sub-Saharan Africa's economic outlook. UK government total investments in Nigeria this year hits £470 million. Plus, the International Finance Corporation completes a $653 million debt package to finance building 13 solar power plants in Egypt. We get started now with the markets, and here in Nigeria, at the Nigerian stock market, equities resumed the new week still on a bearish mode. The losses recorded by Seplat and Nigerian breweries pulled the all-share index down by 0.30% at intraday. In South Africa and Egypt, the markets were in the green, up 0.01% and 0.59%. Kenyan market closed up 0.11%. That was on Friday, even as the country expects the result of the rerun election. In the Middle East, Emma Properties held back Dubai's main index. The Dubai index was down 0.27% at intraday as real estate giant Emma Properties lost 0.8%. This offset gains by several other stocks such as GFH Financial, which rose 0.6% after saying it may list its shares in Saudi Arabia. In Abu Dhabi, the index was also down 0.14% at intraday. The Saudi stock index climbed 0.3% in the first hour, but was trading low 0.19% at intraday. Qatar's index edged up 0.1% as Qatar Islamic Bank rose 1.5%, and telecommunications firm Ooredoo inched up 0.1% despite missing analyst estimates. Moving now to Europe, where stocks were slightly lower in early trade as investors monitored corporate earnings. And for more, let's cross over to Frankfurt, where my colleague there, Ulrich Bartz, is standing by to talk to us. Good afternoon, Ulrich. A beautiful day and a beautiful week.
Hi.
Right. Sure. Let's begin this round of corporate headline news with HSBC raking in a massive $3.24 billion profit in the third quarter. How much of this profit came in from the European market where HSBC headquarters is domiciled?
I think the least part of the profits are coming here from Europe. The bank itself says that it has paid off to focus so highly on Asia, on Asia's emerging markets, and especially on South China, the region, the affluent region of Guangdong. And HSBC is making a lot of money there. And by the sound of it, it hopes to even increase those profits over the years. The European banking industry here, of course, looking at zero interest rates, but at the same time, the business not as dynamic as apparently at the same time it is in Asia. And the bank also profiting, though, I think one must add that, from austerity programs, efforts to hike up its profits from over-exaggerated structures that it has. It has been shedding thousands of employees, and that, I think, also has added to the increased revenue, increased profit picture at least.
Ulrich, quite a number of corporate news coming into the markets today. Swiss-based pharma giant Novartis is delaying the spin-off of its eye care division, Alcon, until the first half of 2019. Now, is Novartis' revenue earnings getting unhealthy?
Yes, I think that has something to do with Novartis' revenues and earnings not being quite up to scratch, not being quite where Novartis would like it. And with Alcon having great revenue increases and profits that that you can show around at home, I think they're a little reticent to let that eye care unit go ahead of time. And probably they will take it public. They will spin it off when the time comes, when Novartis numbers are a bit better. But at the moment, I think that has very much to do, the delay of the spin-off, with the situation in the home company.
And still on corporate news, but on the other side of the Atlantic, the latest from the U.S. Was that of Walmart Asda replacing Sean Clark with a new CEO, Roger Burnley. Any insight into what this leadership change is all about?
Yes, Asda, it's the UK arm, if you will, of Walmart. It's the number 3 grocery retailer there, supermarket chain, and it's been feeling the invasion, if you will, of German discounters. Aldi and Lidl, they know how to make a buck, they know how to make a pound, a euro, with low-cost business, with low-cost wares, with very austere concepts, and the consumers are taking to that, and they're taking to that in Britain now too. And it's affected Asda as one of the big 4 in Britain, which was having low prices the most. It's felt the competition, and apparently now the CEO has to take the consequences there for not reacting quickly enough. The profit is going up again now, we hear, in the last quarter, but he probably didn't react quickly enough. His number 2 man, the chief operating officer, will move now up to CEO position. But he has some experience with Asda as well so far.
All right, thank you very much for your time, Ori. The week has just started, and we have quite a number of issues to chew as the week unfolds. Enjoy the rest of the day. We move on now to the U.S., where stock index futures pointed to slightly weaker open as investors await the latest batch of corporate earnings and economic data. Earnings season continues to be in full swing, with a number of major brands gearing up to publish their latest financial figures. Meanwhile, a new batch of data is set to come out, with personal income and outlays being released at 8:30 a.m. Eastern Time, while the Dallas Fed's Texas Manufacturing Outlook Survey is set to be published at 10:30 a.m. Eastern Time. Elsewhere, 3 separate bills auctions are set to take place. Looking at those futures numbers there, all looking red. Dow Jones Industrial Average 0.18%, S&P 500 0.22%, and Nasdaq 0.03% down. In Asia, shares closed mixed today as investors digested quarterly results from regional corporates. The Nikkei 225 erased early losses to close 0.01% above the flat line as trading houses and financial stocks declined. Across the Korean Strait, the Kospi tacked on 0.21%. Australian ASX 200 rose 0.27%. Hong Kong's Hang Seng Index was off 0.11%. Mainland markets stumbled but closed off session lows. The Shanghai Composite fell 0.77%, and the Shenzhen Composite sank 1.73%.